Hey everybody, this is Jeff, Swing Trade Warrior with WarriorTrading.com, back with Friday's rendition of the nightly watch list and trade recap. Looking ahead to Monday next week. I like to get all my junk done early so I don't have to deal with it over the weekend. I can be kind of free and clear, and so that's what we're doing here. So I had a couple people ask me this week what happened to TC2000, why I don't use it anymore. Well, you can see on the screen, still use it all the time. I just have changed my process a little bit. Instead of building the watch list over time on ticker, I've now just gone to highlighting the trades that I'm going to be watching and why, because it's just a big waste of time for everybody to watch a 45-minute video to end up with 5 names for the next day. So I spare everybody the long video and myself and come up with the names, and that's what we're going to do now. We're going to go over the watch list for Monday, as well as talk about condition of the market and anything else you guys might have questions about. If you have any questions, pop them into the corner or to the message box in the corner, and I'll get to them as we go along. If you're watching this on a recording, I'll get to you via email, jeff@warriortrading.com. Always happy to answer questions from new traders and new people. And so real quick, I want to show you here some things. This is my eSignal platform, which I like for just about everything. I use it for day trading, swing trading, and I use it daily. The only purpose for TC2000, again, is for the swing trades. So the scans for the swing trades. So looking ahead here, this is the S&P just as predicted. Once the S&P popped up and over this 200 area, which we tested for a long time, right? Big move up off the bottom here. We've moved. We test this $200 area, also where the moving averages are. We got this predictable test of the 205 area. We broke through it yesterday, but we couldn't hold that, so now we're trading on an inside candle, which really looks like a big doji here, or a spinning top, a candle of indecision, indicating that the buyers nor sellers are really in control. This thing could go either way. The SPY is in overbought conditions. You can see this red dotted line down here. It represents RSI. It's trading just at the threshold for overbought. It has had a pretty big move, and I think we are due for a small pullback, much like you see right here. We shot up, big move up, little consolidation period, very healthy for the market, right? Profit taking, consolidation, and then we move back up over resistance. So this is very healthy. We need to see this here in order to get to the next level in our markets here. So banking on this fact next week, I think that we will have a pullback at some point here, at least in the next 30 days. And so that brings me to 2 recent trades I want to talk about today. One was on Oracle, which was a big beat from their earnings, and a nice gap up you can see here, and a run. We played this one, put trade on it just before earnings right here on this big spike down, and we made some money. And now I have entered a put spread again on this, basically for a couple reasons. One, it's showing its RSI is nearly 77. It's massively overbought. It has put in obviously a big move up from earnings, but it is trading. Let me zoom out a little bit here so we can see where it's at on a more macro time frame here. It's trading at resistance right now. So if I zoom out here, this 4150 area, you can see plays a role going back to 2014, all in through here. It was support through here. Now it's resistance. So we have this combination of perfect day trade reversal setup, and we just apply it to a macro chart here, or a daily chart. So it's basically the same thing we look for, the same conditions we look for when we're day trading reversals in the chat room. We're looking for certain things like overbought conditions. Okay, the RSI is at 77. It's well over the top of the 70 threshold. We're looking for extended chart. Is the chart parabolic? Well, it's not necessarily. It's not necessarily a parabolic chart. But what we do have here is this serious overextension, right? This thing just keeps making these big strides, big gap that's left to be filled here. Everything, obviously we're still on super high relative volume, which is all great. But as soon as the market reverses, and we just showed you why, on the S&P there, because we're testing that big resistance area at 205 on that inside candle. As soon as the market comes in, this is going to be a likely candidate for a reversal. Also, keep in mind, most stocks will trend in the direction of the market unless they have a catalyst. Well, the market happened to be strong this week, and the stock had earnings, so it's moving up. The earnings are behind it. Everything's priced in here. It's all baked in. So now we're going to look for a reversal in the market, and an overbought stock is likely to reverse as well. So in anticipation of that, we looked at the implied volatility for Oracle, and it is very low. This is not to be unexpected. You can we play iron condors all the time around earnings to capitalize on the volatility crush that follows earnings. What does that mean? It means when earnings are approaching, implied volatility and options premium prices is higher, and as the earnings event takes place, no more implied volatility. There's no more anticipated volatility once the news is out of that price or of that earnings event. So the implied volatility falls back down. It's called earnings crush, and it does so very, very rapidly. So that's why if you ever bought calls or puts only during an earnings event, thinking that you were going to win, and had the stock shoot up on you or whatever, and you're like, oh yeah, this is a great winner, you can still lose, because the implied volatility alone, the crush alone, can damage your premium, and that's what we're banking on here. So this has happened. Implied volatility is low, and now it's too low, so we're looking for the reversion to the mean. Basically, we're looking for implied volatility to come back up now. We did a debit spread. When you're looking to go long on volatility, when you want to see the implied volatility increase, you do debit trades, and when you want to capitalize on the selling or the crush from implied volatility, we do credit trades, credit spreads. And in this case, we did a 39.37 April put spread, looking for the reversal to occur in conjunction with the market. And hopefully what we'll see is a quick spike up in implied volatility as the selling increases, and we'll look to profit probably before the stock price even hits 39. So before it's even in the money, we'll make 30, 40, 50% on it, and we'll be out and we'll move on, look for the next one. Maybe we'll leave a few shares or a few contracts on for a gamble on a bigger move. Okay, so this is the trade on Oracle we opened today. It is a bearish play. Also, FedEx, very similar. FedEx, same thing. We did an iron condor on this. We lost on this iron condor. We won on the C-trip iron condor because that earnings event was flat. This one was very big event. We had this big gap, 10-point gap to the upside here. This thing is trading just under big resistance at 164. Whoa, okay. This thing's trading under big resistance at 164. You can see previous support back here in 2014, in April 2015, and then again here in July of 2015, right? So this is a very contentious area. What do we have? Well, we have RSI is at 80, which is 10 points over the top of the lower end of being overbought. So it's well overbought. We have a very extended to the upside move here as this thing gapped up over its moving average right up underneath resistance. What do I think is going to happen? Again, like Oracle, if the market comes in, this is going to be a likely candidate due to its overextension to at least pull back for a short period of time. Not looking for it to fill the gap, not looking for it to get back down to 145. We're just looking for it to give us a 30 to 50% bump in the premium of the options that we took. So looking at the implied volatility, again, this is low. I did I believe it was in April, 160 by 155 bull put spread there for a debit, because we're buying the volatility. We expect it to increase as the stock is moving backwards rapidly. So we're looking for, again, 30 to 50%. All of my options trades, unless something changes or something happens, I'm always looking for 30 to 50%. Overnight, sometimes it'll gap and we'll get 100%, and that's great. But more often than not, what will happen is we'll just slowly move through the price. And so when I put these on, as soon as my order fills, I follow it up with a sell order. I follow it up with a sell order to close my position at, like I said, anywhere from 30 to 50, depending on the price of the options, what I think the chart has room to do. Maybe I'll sell half at 30 and I'll sell another half at 50. All just depends. So this is another bearish play here. Like I said, we got short on a lot of names today, looking for that market to come in sometime in the next 30 days to bring this out of its oversold, out of its overbought conditions here. Josh asked me, does the news overplay the RSI? In some cases, absolutely. But I want you to take a look at this chart. Where was the last time on this chart you saw overbought RSI conditions? Looking at it here, I don't see overbought since way back on, let's see, 1202 here of 2014. And we popped up and over this for about 5 days, and then it sold off hard. Same thing back here in September of 2014. We have this little pop-up over, and then it sold off hard. So this is only the third time in nearly 2 years for this company to be in this oversold territory, overbought territory, and it's higher than it has been either of the previous times. So looking for, like I said, some sort of either a long period of consolidation, which would suck because we're probably not going to lose, probably not going to make a lot of money, but more realistically, probably a pullback with the market down toward the 155 area, and that's where we're going to profit. So in some cases, news will overplay RSI. In some cases, RSI will overplay other indicators. It's just a combination. You have to go with the strongest probability or the strongest likelihood of what's going to happen. CPT. What am I looking at on CPT here? This looks like a bull flag that broke out here, popped up, made new highs. For a short here, it's potential short. I mean, under this low of this whatever today was here, under 81.77, I guess. I mean, let me zoom out. You're right above this big top. I don't know if you can see this right here, but you're right above big support here, down to 81, just under $81. So I don't know how much room you really have here, about a point or so. I'll show you a name that I have on short watch for tomorrow. It's a little bit of a cleaner setup. This one kind of spiked up here and then gave it up today. This is a very hard chart to find a clean entry on. So having said that, I'll go backwards with TWX. This is my short candidate for Monday. Hit the scanner today, right? We have this earnings reversal from earnings lows down here at 55 bucks all the way to a high of just under $74. TWX is trading under. The sector was up today, by the way. Everything in media broadcast was up today. Television. Trading under big resistance here at 73.70 area, just under 74 bucks. Everybody can see that, I'm sure. Goes back for quite a while. We're looking at the spinning top here as it tested the 200 moving average today and did hold above it, but obviously not a very strong chart here between the 200 and resistance. So considering this big move was just put in here, multiple green days in a row, again looking for a pullback in the market for an entry here under the 71.80 area, which was the low today, which was 71.89. For a possible move here down to about 70 bucks initially to give us $1.80 of room. And if we can get through that, we'll have room down to 69. So ultimately, let me take off this market map here. You can see a little bit cleaner. Right there. All right, so let me zoom out. Okay, so this is the resistance at the top here, looking to get short on the first candle to make new lows, right? It's been a strong uptrend, not a lot of new lows being made. Room down to 70 bucks and then down to 69 or so. Just based on previous areas of support where we can likely find buyers hiding. Okay, so that's going to be on short watch. We can do an options trade on this. We could do a stock trade. I'll probably, since it'll be a quicker trade, probably just look to do some stock with this, maybe 1,000 shares or so. You can certainly look to do a couple of things here. One, you look depending on volatility. I don't know what it is, but depending on it for this stock, you can certainly sell a bull call spread, right, over resistance. So if resistance is at 74, you could sell the 74 by 76 or whatever. Sell the 74, buy the 76 calls, get a credit for that, And as the stock falls, if implied volatility is high, it will fall too, and we'll look to capture money on the credit side. Of course, your gains are capped. You could do a put spread for a debit. You could buy the whatever 71 by 69. I don't know what their strikes are, but you could do a debit put spread too. Just depends on where implied volatility is at, and what your comfort level is. I'd probably just use stock for this. So, all right. Other one is MMI. This is my long watch for tomorrow here. I really like this chart. We had this move up off the lows. We had an earnings event that was really a non-event, but what I like about this here is we're trading under this top, right? We got resistance back here in January, and then again here, 2477 or so, 2475. We're trading under this top, but what I like here is we're starting to squeeze the moving averages. We got this 20 moving average, the purple, this 50 moving average here. As these things come together, they're going to form, a pivot spot for the stock. The stock is going to have to move above it or below it at some point. So this is more of a bullish chart. If the stock market stays strong, I think we have a good chance of breaking out as those two moving averages start to squeeze each other. Now, as we all know, when you get a price action crosses over moving average, it can be an indicator of a trend reversal. You can see back in this whole time here as MMI has been selling off since November earnings, a gap down. This thing has been trading under the 20, hasn't poked its head above, right? So this first curl off the bottom, we get a little poke over the 20, the first time in months, first time all year, and it's held the 20, and now it's tested the 50 here. Couldn't get over the 50 on the first try with earnings, and so now it's squeezing it here, and we got to close just over the 50 today, which is also under resistance. So all these things kind of line up saying, okay, there are buyers in the stock that are holding this thing up over the moving average support now. It's testing a big resistance area, and it is on increasing volume. You can see down here we have still light volume stock. It's not a really heavy traded stock, but you can see that the buyers are pouring into this thing here as the relative volume from one day over the other was much higher. What does this tell us? Increasing volume with the stock closing at the highs just under resistance. It's a good candidate for a breakout. So it meets all their criteria here. Also, check out the RSI. It is not an overbought territory, but it is on the high side, indicating that it is in a strong trend right now. So the buyers are definitely pushing this higher. I think along over 24.75. We'll look to do an add over 26. If you're late in the trade, that's another spot to get into it there. And then also we're going to look to be out of this by 28.40. So this is realistically what I think we have a chance to accomplish here. We get long over the top of this resistance area, the first blue line, just 24.77, $25. Add over 26 because that's where the this gap up was following earnings. We need to clear that area, so we'll scale into that strength and we'll add up. That'll get us. That'll be over 25.90, I guess is what it is, right at 26 bucks. And then we have room right on up to 28.40. So you can see that resistance area 28.35, 28.40. Why is that a resistance area? Because previous support back in December of 2015, where the price action kind of bottomed along that area a few times before breaking to the downside. So we're going to see resistance when we go back to the upside. Previous support will become future resistance. All right, BONT, another name I have on the long watch here. I like this for a bull flag breakout. It's not the cleanest bull flag I've ever seen, but it is there. And we did have this big move up here previous to earnings. And let me zoom back in here. All right, so we had this big move up previous to earnings here. We tested the $3 area a few times, and we could not hold. And so we sold off, but we are holding moving average support down at the 20 and the 50 EMAs. This is a good sign because it means these gains were not given up, and we're looking good here for another test of that $3 area. Why was this area $3 a pivotal spot? Well, one, you have this big spike to the upside in a couple days here. This stock went from $1.80 to $3 in 2 days. You know, that's like almost 100% move in 2 days. So that red flag threw the RSI up into massive overbought conditions, and all the other sellers and people looking at this chart that I'm looking at saw back here from August of 2015 through October of 2015, $3 area was support, right? It's a big pivot spot here. We have this move to the downside, bounces off $3, bounces off $3 again a couple months later, and it bounces off another couple months later before finally breaking down and selling hard down to the $1.10 lows. So we know that $3 area is in play. Also, we know that stocks under $10 tend to have a lot more support and resistance at half and whole dollars. So that half whole dollar area is going to hold a lot of buyers, sellers. That's our target on this trade. We'll look to scale out on the move there. We'll be in this, I think I said in the watch list it was over 270 or something. We'll be in at 270. Look for a 30-cent move on this. That's well over 10% move. So we can take a little bit of size here. And if we get some sort of bullish indication that we're going to bust through $3, we can hold on to a piece of the trade, maybe add back over that $3 area. But then we're going to run into another roof here at 324, which is the 200 moving average. And it's just kind of choppy up through here. I mean, eventually you can get it up to 380. But remember, we're looking for, this is a swing trade, it's not a position, it's not an investment. We're looking to take our profits 3 to 5% over the next few days on this. So longer term, this thing can get back to 380 before you start seeing this resistance area play. But we'll be out of it long before then, I suspect, with our profit here, well over 10% of room on that. What is my take on CBRL? CBRL, Cracker Barrel, let's see here, the big spike up today, could not hold. That's a, let's see, $4.59 tick range on the day. Let me analyze this. Let me zoom out a little bit. Okay, so why did we fail at that level? What's there? Okay, so we failed at that level because it was resistance here and it was resistance here, right? Even though we gapped up and over it, this was very temporary here. But you can see that it's definitely a pivot. So it hit that resistance area today, and it looks like it's going to come down to probably, I mean, this is a tough one. This isn't a very clean chart here. I mean, we'll have room down to 154, maybe 152, because you got some resistance here. It'll be support now going forward. So, I mean, this thing, oh, it's already below 154. Whoops. Well, this has a $5 ATR, $3.50 ATR. Okay, so your next support area, then maybe the next major support area, which you can see was a pivot right here back in March of 2015. Again, in July of 2015. That's the 148.55 area. So maybe 148 to 153. It's about 5 points. Give it a day or two with the ATR being at $3.50, and that's probably where it's going to head. Either way, it's not my kind of setup here. It's kind of it could go either way. It is just barely in overbought territory, so you know, it might trade in this range for a while here. I just don't know enough about this to jump in here. This is not the best setup I've ever seen, though, for any kind of short or long. It might be a long over the high here, but again, you're going to be testing the all-time highs right there at 162. I think Disney, when is Disney's earnings? I think they're coming up, or they just had them. They just had them. Nike's coming up. Nike is next week. We'll be watching Nike for an iron condor. Disney does look like a long here. A nice pullback today. We tried to break out over this resistance top here, just under $100, 99 bucks. Tried to break it, couldn't do it, and I suspect once it does, I'll probably have some decent room to 103. I'm just trying to find where. 103, then 104.60. So despite being a $100 stock, it doesn't really move a lot intraday, but it does trend heavily from day to day. So I think over maybe let's see, what is this? Over the 99.80 area, $100. Might as well just wait till $100. Take it over 100. I think you have room to 103 because you got some support at 103, which will be resistance going forward, and then again at 104.60 area, where that's the mouth of this little gap here, and also support from back here and resistance in here. So previous support, guys, remember, going to become previous support, going to become future resistance will become support, and now it's going to become resistance again. So 9.29. What's that? Oh, right there. Back to the watch list here. Oh, nope, that was it. Those are all the names on the watch list. Only have a few names. I looked for the earnings plays on Monday. Earnings on Monday are very light. We don't have a bunch of activity. So, like I said, we are very heavily biased to the downside. We're bears right now because all the things that are in overbought conditions while we're testing resistance are creating a high probability chance for a lot of reversals. So we took some spreads, and we're definitely looking for the implied volatility and a lot of those to kick in as the market maybe pulls back here in the next few days. If the market keeps going higher, that would be unfortunate, but once again, taking a look at it, we have pretty major support, pretty major resistance at 205 we're testing right now, and you know, if it wants to break through this area, it's going to be one crazy parabolic chart here, and so I don't think that's healthy. I'd much rather see it pull back to the 201, 200 area for a few days before making our run up and then back to 208. But we'll see what happens. Like I said, we don't really care what happens. We have positions ready to go, long or short, depending on what the market gives us. So we're not too biased, but like I said, next week definitely delta negative in the portfolio, which means I'm looking for moves to the downside. So if you guys have any questions and you're watching this on a recording, Jeff at warriortrading.com. Always happy to answer any questions you guys have. Other than that, I'll be golfing this weekend and enjoying the weather before our next storm. So I hope you guys are able to do the same, and everybody have a good weekend.